Hi everyone, Stacy Whiter here on behalf of Campus Mortgage with some quick tips for you on how to combat mortgage fraud. This is part one of our three-part series of red flags. Now just a quick reminder before we get started, this video is for informational purposes only and should not be considered legal advice or used in place of Fannie Mae guidelines. Also, this video was created on February 28, 2017, and the information contained in this video is subject to change without notice. So let's talk about mortgage fraud. Now, the technical definition is this. Mortgage fraud means a material misstatement, misrepresentation, or omission relied upon by an enterprise to fund or purchase, or not to fund or purchase a mortgage, including a mortgage associated with a mortgage-backed security or similar financial instrument issued by or guaranteed by an enterprise. So mortgage fraud can encompass anything or something as simple as a borrower purposely omitting information on an application all the way to a complex insider fraud scheme. Now, a lender has requirements as well as all mortgage professionals have a responsibility to be aware of, to prevent, and to report mortgage fraud. A lender must notify Fannie Mae immediately if it learns about any type of misrepresentation or possible breach of a selling warranty, including fraud. Now, Fannie Mae is required by regulation to report all possible mortgage frauds to the FHFA, who reports to FinCEN, which is the Financial Crimes Enforcement Network. Mortgage fraud in the industry hurts everyone, including lenders, investors, mortgage professionals, and borrowers. So it's, again, our responsibility as mortgage professionals to be aware of, to watch out for, to prevent, and to report any type of mortgage fraud. So with that being said, let's take a look at some high-level red flags that you can look out for. Now, this is not an all-inclusive list, but we're going to go through some of the common red flags that you can look for at any stage of the mortgage process. So one of the first ones during application is to look out for an excessive number of AUS submissions. So if you see a large amount of submissions to the automated underwriting system, that could indicate that someone is trying to game the system, or they're just trying to get it to changing different things here and there to get an approval status. Another thing to look out for is different handwriting styles within a document. So if you have a certain document and you notice that there's a significant difference of handwriting styles from page to page of the document, that could be a red flag. Verifications completed same day as they're requested, or on a weekend or a holiday. Social security number discrepancies, this is a big one. Address discrepancies. Maybe the address on their driver's license is different from the address on their bank statement, and it's also a different address which is listed on their paycheck. So those could be potential red flags. Also, document alterations. A copy of a copy of a copy sometimes can be an indication or a high-level red flag. Next, let's take a look at some mortgage application red flags. The same phone number for applicant and employer. Extreme payment shock. Maybe their current rental payment is only $800 a month, but they're making an application for a $3,000 a month payment. Purchaser of investment property does not own their own residence. So you've got someone who's looking to buy a rental property, but they don't own a primary home. That could potentially be a red flag. Cash out on a recently acquired property. The employer's address is shown only as a post office box. There's no physical address. Significant or contradictory changes from a handwritten application to a type application. So you have two applications in the file. One is handwritten by the borrower, one is typed by the loan officer or someone else, and you see some significant discrepancies. Another red flag to watch out for. Sales contract red flags. The name and/or address on the earnest money deposit is different from the buyer. Non-arm's length transactions. You have related family members who are purchasing the house and also the buyers as well. Purchasers deleted or added to the sales contract. Maybe there's no agents involved in the transaction itself. That could also be a red flag. Power of attorney is used. Earnest money equals the entire down payment. Or the contract has limited fill-in-the-blank terms, which indicate maybe that there was no real negotiation in the process. Well, that's all for now. For more tips and videos, please visit campusmortgage.org and look for the weekly video mortgage tips and designed for all mortgage professionals, including underwriters, processors, loan officers, closers, and post-closers. Thanks for watching. We'll see you next time. Bye-bye.